Silver has just exploded past $91 an ounce. The move has been so violent that the U.S. Mint has actually paused parts of its silver lineup. Big box retailers are slapping strict purchase limits on physical metal. Even the futures market tried to step in by changing margin rules to cool things down. Yet despite all of that, silver is still climbing. Today we are answering a critical question. Are we witnessing the beginning of a historic repricing, or is this the kind of late-stage surge where something eventually breaks? This isn't just a slow grind higher anymore, it's a full-blown sprint. Inventory is vanishing, spreads are widening, and the gap between a paper quote and a real metal-in-hand bid is getting louder by the day. Before we dive into what the Mint did, what Costco is seeing, and why that east-west price split deserves your full attention, I want to address something quickly. I am running a campaign to push back against copycat channels that simply recycle content and dilute the message. If you value the original research we do here, please support the work, subscribe, and leave a comment saying OG John Ag, so I can see who is truly part of this community. Because I want this audience connected in one place, I also created a WhatsApp channel for daily updates. I'll be posting quick notes, important headlines, and the daily video link there, plus personal observations that don't always make it into a full upload. You can find that link in the description. Make sure you join so you don't miss the fast moves when they happen. All right, let's jump back in. Silver is trading above $91, and it is not behaving like a normal commodity. Normal commodities move with a sense of patience, but silver is moving with pure urgency. You can see it in the intraday whips, the sudden gaps, and the way dealers are reacting in real time. Gold is moving as well, and that really matters. When gold and silver rise together, it stops being just a simple trade and starts looking like a major monetary event. It is a sign that confidence is leaking out of something else in the financial system. One way to frame the bigger picture is through the gold to silver ratio. As silver rises faster, that ratio begins to compress. That compression often tempts people to get fancy by trying to swap, trade, or pivot to time the next leg. But before you try to do anything clever, ask yourself one thing. Are you positioned for a chart, or are you positioned for a market that might not deliver the product on time? Those are two completely different games. You're going to hear the usual explanations for why silver is ripping right now. People will point to rate cuts, political drama, and geopolitical tension. And yes, those factors certainly add fuel to the fire. Lower expected rates and general uncertainty almost always help precious metals. When institutional credibility takes a hit, metals tend to shine. But those are just the broad headlines. The more important story is what is happening under the surface regarding availability, flows, and mechanical pressure points. These pressure points show up when paper prices and physical reality stop behaving like the same thing. This week was a massive stress test for that relationship. Let's start with the East versus West price split. When one major global market is paying materially more than another, that isn't just trivia. That is the market telling you exactly where the real bidding pressure is located. If buyers in one region keep paying a rising premium for immediate metal, the supply will naturally flow toward the higher bidder. If that premium persists, the cheap market eventually has to pay up or watch its inventory get completely drained. That is a direct pathway to $100 silver without any need for magic or memes. It's just real bids pulling physical metal. Now, let's look at the US. Mint pause because it is being misunderstood in both directions. This is not the end of silver production. What it signals is much simpler. Pricing simply cannot keep up. Certain numismatic silver items were paused while pricing adjustments are evaluated. In plain English, silver moved faster than their internal pricing framework could handle. That matters because when a major institution hits pause because input costs sprinted away from listed prices, it tells you the move is anything but gentle. The entire pipeline is reacting to this volatility. When you zoom out to the retail level, Costco has quietly become one of the clearest signals in this cycle. When a mainstream giant is selling out, adding limits, and struggling to keep listings active, it tells you demand is outrunning replenishment. They don't limit your cart because they're bored. They do it because the drain on supply is real. Even if the spot price is the headline, the physical market is where human behavior actually changes. Out-of-stock notices, shipping delays, and widening premiums turn casual curiosity into a sense of urgency. If you are buying anywhere right now, you should expect delays and back orders. Expect dealers to protect themselves with higher spreads. That isn't necessarily price manipulation, it is logistics meeting a stampede. While the physical side is tightening, the futures market tried to give the rally a cold shower using margins. To keep it simple, margin is the collateral you post to control a futures contract. When the exchange raises margins, it becomes more expensive to hold a position, which usually forces leverage traders to sell. Normally, this slows down a rally, but this week was unusual because the margin structure was changed to scale directly with the price. As silver rises, the cost to stay in the trade now rises automatically. That is supposed to be a massive break on the system. And yet, the price kept climbing anyway. That is not normal behavior. It suggests the buying pressure is strong enough to absorb the friction, or the market is so stressed that the usual tools aren't working. Think of it this way. A standard silver futures contract represents 5,000 ounces. At $91, that's about $455,000 in notional value. If the margin is around 9%, you're looking at over $40,000 in collateral just to hold one position. If that requirement keeps rising as the price rises, it's like a treadmill speeding up while you're already sprinting. So why would anyone stay in? They stay because they believe the upside is bigger than the pain, or because they are hedging a much larger risk. In some cases, they stay because they actually need the physical metal. That is the point where markets stop respecting normal speed limits. Some commentators will call this a mania and move on. They'll say it's just a technical breakout or a reaction to interest rates. Neat explanations are comforting because they make the chart feel controlled, but there is nothing neat about a major mint pausing products, a massive retailer limiting purchases, and a futures venue changing mechanics while prices still push higher. That is a system reacting to extreme pressure. Silver has always been a metal that behaves politely until it doesn't. It can spend years going nowhere and humiliating everyone involved. Then, when conditions finally align, it can move so fast it erases months of resistance in a matter of days. But what phase are we in right now? If this is the early phase, the biggest public wave hasn't even arrived yet. If this is the late phase, volatility will spike and the shakeouts will get vicious. A true mania is never subtle. It's when people who never cared about silver start shouting about it. We aren't fully there yet, which means there may still be fuel left in the tank. As a reminder, my analytics show that a lot of you watch these videos, but haven't subscribed yet. If you want to support this channel, please hit that button and comment OG so I know who the real community members are. The biggest question isn't how high the price can go, it's what happens when everyone tries to buy at once. That is when the story shifts from watching a chart to watching the supply chain. Watch for the real signals, premiums, back orders, and shipping delays. If silver is trading at a premium in other major global markets, the metal will flow there. Someone out there is willing to pay more for metal right now, and that behavior can drag the global price higher regardless of what the paper market says. I'm not telling you to chase this move or to panic buy. I'm telling you to think clearly because adrenaline makes people make mistakes. Get organized, know what you own, and have a plan before the next big candle prints. Stay connected through the WhatsApp channel so you can get the context you need without hunting for it. Also, if you want to see silver success stories from real people, check out the second channel linked in the description. Now, I have 2 questions for you to answer in the comments. First, if silver hits $100 in the West, do you think it becomes a magnet that pulls the price higher, or a wall that triggers a massive shakeout? Second, where do you think real price discovery is happening, on paper, or where people are paying immediate premiums for metal? If you've had a win recently, paid off debt, or hit a savings milestone, share that too to help motivate others. Can anything stop this move? Of course, margin shocks, liquidity freezes, or surprise headlines can create violent pullbacks. But remember, a pause does not automatically mean a reversal. Sometimes a market just builds a higher base before continuing exactly when people start calling for the top. Silver at $91 is a billboard that changes how everyone in the industry thinks. It attracts buyers, but it also attracts traps and fake-outs designed to scare away impatient money. The fear stories will get louder the higher we go, but remember that fear is often a tool to keep you second-guessing while the market reprices. The U.S. Mint and Costco situations are real-world examples of a system struggling to update fast enough. If we are seeing this much strain before the general public even notices, imagine what happens when the full wave arrives. It won't arrive politely, it will arrive all at once. Keep an eye on the real indicators, stock levels, premiums, and delivery timelines. The people who win in silver are almost always the ones who had a plan before the chaos started.